Hello traders and good morning and welcome to this market overview for today's trading session. Just going to run over the markets, what we can expect to see today and potential trading opportunities which we can have in the markets. So traders, I'm looking to trade the Canadian dollar at 130 because we have CPI inflation data. Now we know the Bank of Canada just raised interest rates earlier this month and they said that further rate increases will be data dependent, and this can give us a really good trading opportunity for the New Zealand dollar CAD. As we know, the New Zealand dollar unexpectedly, their CPI inflation unexpectedly dropped from 1.9% to 1.6%. And this can really knock the stuffing out of when the markets can expect a rate hike and halt the recent uptrend in the New Zealand dollar. So today, if we get strong CPI inflation data, this will support the market's expectations of a further rate hike from the Bank of Canada in March. And we can sell this currency pair and take a trade to the downside. So this is what I will be looking to do today with the Canadian data at 130. Also, some interesting trades I'm really looking forward to trying to take is the Aussie dollar, US dollar. Now, each and every time the Aussie dollar has come up to this band of resistance, which I'm showing you now, which is 88,500, 0.800 and 0.80500. As you can clearly see, for the previous 2 years, each and every time the market's come up to this level, it's been rejected and sold off. And we're now attempting to try and get through this level again. Of course, this is being driven by the weakness in the dollar more than really bullish fundamentals coming out of Australia. And each and every time last year this currency pair got up to this level, the central bank in Australia came out and said they didn't like the strength of the Aussie dollar because it affects how much trade they can do with the US. Because of course, if the Aussie dollar gets too strong, then less dollars can be transferred and exchanged into Aussie dollars when US buyers are buying goods and services from Australia, and it can reduce how much money comes into the Australian economy. And if we see this again and the central bank starts to come out and say we don't like the Australian dollar being too strong, then we can expect to see what we've seen every time it comes up to this level and the Aussie dollar gets sold off, and this can be a good trade. So we just want to see how the market reacts out of this area. If we do get rejected, we come back down to 0.800, then we know that the sellers are still here and we know the Aussie dollar can't get above this level, and then we can potentially take a sell back down to 0.78500. Also looking at the New Zealand dollar traders, we know that the inflation data came out surprisingly negative, and at the moment we are approaching this band of resistance. As you can see, 0.74500 since 2004 has been a very strong band of resistance. A strong band of resistance was a floor, a support level, and then a resistance level again, and then a very strong floor, and then again it'd be a very strong resistance, and now we're coming back up to this level again. And I remember with the CPI inflation data dropping to 1.6%, a lot of the investment banks came out yesterday and said they now don't believe the Reserve Bank of New Zealand will have a rate hike until at least 2019. So it's very hard to see how this currency pair can continue on an uptrend when there's no rate hikes coming in New Zealand, and the Fed is expected to hike 3 times this year. So it'll be very difficult for the New Zealand dollar to get above these key levels unless there's surprisingly strong data coming out of New Zealand and surprisingly weak data coming out of the US. But at the moment, we know there's no rate hikes happening in New Zealand anytime soon, so it'll be interesting to see how the markets react around this level. If we can't break above this level, then we can expect price to push back down to 0.7200, and this can give us a good trade of at least 150 pips to the downside. Looking across the markets, guys, we know the euro yesterday was bullish after the ECB's meeting, and we've seen a continuation of that because the euro economy is expected to expand moving forward, and we're starting to see it push a bit higher against the dollar. But a good buying opportunity is Euro Swiss franc. So as we know, the Swiss National Bank has said they will intervene in the market and will not allow the Swiss franc to get overvalued because it affects inflation in their country. So the central bank's really trying to get inflation to 2%. And with Europe being Switzerland's main trading partner, they don't want the Swiss franc to appreciate against the euro because a weaker exchange rate for the Swiss franc allows more European buyers to buy Swiss national goods and services on the international market, and more money can come into Switzerland and help the economy get inflation to 2%. So this is a great buying opportunity, traders, at 1.1600. As you can clearly see, it's been a very strong floor and it was a previous resistance, so this can be a good buying opportunity. If it does come down to this level, we will be buying as this currency pair ultimately should continue on an uptrend in 2018 as the euro economy is expected to continue to expand moving forward. So traders, that's just some trades I'm looking at the moment. So we will be trading at 1:30 p.m. and I will keep you updated on the markets on what's happening throughout the day. Thanks, traders.